Hello, everyone, and welcome to today's CPD. We will start in the next minute or two. We're just giving people time to join.
And that's on mute. Okay.
Sorry, so just another minute or two, and then we will get started.
Morning, everyone. We're almost there. We're just going to give it 1 or 2 more minutes for more people to join, so we'll be back with you shortly.
Hi, Jared. If you want to start, I think we can get it underway.
Good morning, everyone. I'm Jared O'Toole. Welcome to today's CPD session. Today's CPD is part of the Property 360 series, and it's a 4-part series over the next month or two, which will be covering all aspects of the residential property market, including broad outlook, which we'll be covering today, and the second home market, the rental market, and new homes. We have 3 fantastic speakers today, which I'll introduce you to. And as I said, today's is an overview of the residential property markets and the outlook for 2024. And this is largely based on the recent Society property report. Now, as I said, we'll have 3 speakers, which will each be about 15 minutes in length, covering various aspects of the market, 2 from the industry and 1 from an economist point of view. After that, then there's a section for question and answers towards the end. So listen, without further ado, I'm going to introduce you to the first speaker. The first speaker is John O'Sullivan. He's a director of Lisney Sotheby's International Realty and has worked in the industry since 1995, specialising in the sale, letting and acquisition of residential property and development land. He's a member of the Society and the RCS, and he's currently the Society Chair of the Practice and Policy Committee and is past chair of the SES Residential Practice Group. He regularly comments on the market trends and Society reports on behalf of the Society of Chartered Affairs. John, without further ado, over to you. Thank you.
Good morning. Thank you. So just thank you very much for everyone for joining us this morning. The SESI Annual Residential Review and Outlook is a sentiment report. And we survey the opinions of primarily our residential members, and over 140 members who contributed to the views contained within the report. So I've mentioned this before at previous presentations, and particularly with regard to this report. Our members' views are very important, and if you haven't in the past contributed to the survey, please do so in the future, as it's important that we get as accurate a position as possible, a view as possible within the market. So the questionnaire, which formed part of this report, was completed by members in December and January, so it's all very recent. And I can't go on without saying this, but an awful lot of work goes on behind the scenes within the SESI. As members, we very often underestimate the expertise and dedication within the SESI staff, and the quality, production and content is primarily down to them. So it's also interesting, every other week, there seems to be media coverage of SESI reports. Often the content can be discussed within Dáil Éireann, within print and broadcast media. And as members, we benefit from this, as consumers are well aware of the credibility and quality of the SESI branding, which we actually hold as members. So looking at the next slide, our forecasting for price increases in 2024. So Our members predict nationally that house prices will increase by 1% in 2024. And just to give a little bit of historical context, this time last year, our members predicted an increase of 2% in 2023. And prices increased in 2023 by 2.3% nationally. So the sentiment that we sought and received by respondents was very close to reality by year end. So looking at the report and the responses to the survey, 2 out of 3 respondents, 63% to be exact, believe that house prices have either peaked or are close to peaking. And the main factors influencing the house price movements are the supply of homes. So in 2023, there were approximately 60,000 homes sold. And if you look, for instance, the recent Daft report stated that in December, there were just over 11,000 homes available for sale. And this was down 27% on the same period in 2022. And that trend looks set to continue into this year. There were just over 32,000 new homes completed in 2023. It's an increase of 10% in 2022, but we all know that realistically this is behind where it should be. Another factor is obviously the interest rates and the continual cycle of rates throughout the latter half of 2022 and into 2023. They dampened the market. Ordinarily, such increases would result in prices falling back, but it's the lack of supply that has held values to where they are today. So if you look, for instance, 3 out of 4 respondents report say that there is a lack of supply, and on our previous report historically on 2023, that's an increase. About 10% more respondents say that there's a lack of supply on this time last year. The other main factor from price movements is the state of economy, and another fourth factor which members have said is that the influence price increases or prices in 2023 is a potential change in government or change in government housing policy. And if you look, for example, the main opposition party are opposed to assistance such as Help to Buy, and many would argue that such assistance has helped to bring supply of new homes to the market. So if we look at the next slide, which is the persistent affordability challenges affecting or facing new housing. So we run a kind of a case study, and we've run this for a couple of years in our reports. So it's a case study using a sample couple, a nurse and a Garda, both with 10 years experience. They earn a gross combined income of €89,000 per annum. And using this sample couple, the Northwest, Midlands and Southeast are the most affordable for that couple, but the Greater Dublin area, which includes Dublin, Wicklow, Kildare and Meath, being the least affordable. In fact, they're priced out of these areas, and they're also priced out of Galway. So the sample couple we use are buying a new home. They avail of the Help to Buy scheme. There are, of course, other options out there, such as the First Homes Ireland, which is a shared equity scheme. We haven't used that in our calculation, primarily because when we first started using the sample couple, that didn't exist. So if you look at the next slide, which is property transaction volumes, there were just under 60,000 residential property transactions in 2023. If you can move on there, Grace, onto the next slide, it'd be great. So that's 59,967 properties to be exact. 30% of all transactions were in Dublin, 11% in Cork, and almost 7% in Kildare. That's an increase of 285% when you look between 2010 and 2023. And interestingly, in Dublin, in 2010 accounted for 33% of all transactions. So although declining, 1/3 of property sales are taking place in Dublin. So the 3 main commuter counties around Dublin have consistently seen an increase in the percentage share of transactions. And for instance, if you look, Meath has increased from 4.1% in 2010 to 4.5% today. Wicklow from 3.8%, having recorded 3.4% in 2010. And Kildare has gone from 5% in 2010 to 6.6% in Kildare. Now, this is their percentage of the sales nationally, of the volume nationally. If you look then, for instance, Limerick has been fairly consistent at 3.6%. So you can just move on there, Grace, slide. Next one again, sales instructions. We can just move another slide on there. That's perfect. This graph is a sentiment graph. I would actually call, when you look at some of these graphs, they can be a little bit hard to understand. They're within our report. And I would kind of call them the happiness index, just for simplistic terms. They track the sentiment on sales instructions from our members who respond to the survey. So we can see, for instance, like 2020, the post-pandemic dip in 2020, and then the post or the pre-pandemic dip, pandemic dip, and then the post-pandemic surge. So anything above 0 on this graph is a decline in sales instructions. Anything above 0 is members reporting an increase in sales instructions. So as we can see, members are reporting less instructions than more instructions. So that's where we stand at the moment. And in fact, as I said earlier, 3/4 of respondents, 76%, have reported a shortage of supply, and this is up 10% on the same period last year. So nationally, members are reporting reduced supply. And for instance, the property price register has shown a reduction of 4% on the number of transactions between 2023 and 2022. But when you look at the area that I operate in, which is South County Dublin, it certainly feels like a more severe drop in supply year on year. So the next slide we'll cover is the sales inquiries. So again, we're using the same context of graph, or you can same again, I call it simplistic terms, the happiness index. But as you can see from the graph, we track sales inquiries. Members are reporting an increase in inquiries, not sales, inquiries, between Q4 2022 and Q4 2023. From my own experience, I would say that in the same period last year, there was a lot of uncertainty around interest rates and nervousness amongst buyers as to, well, we knew interest rates were increasing, but they were wondering what effect that would have on the market. Saying that, obviously, we still have the need for housing, together with the lack of supply, and that has resulted in values holding or modestly increasing, giving buyers a little bit more comfort in the purchase. And certainly, the feedback from respondents is that 2023 was a very active year with increased inquiries and viewings. And again, this is a national average. There may well be micro markets within the country that instructions are significantly more or significantly less. So the next slide, we look at sales agreed but not proceeding. So again, this is something which we track within the survey to our members, and we included in the report. So as you can see from the graph, there has been a steady increase in the number of sales not proceeding. And I know from my own experience, this is, as an agent, just totally demoralizing, extremely frustrating. And we put in all the hard work, listing a property, extensive viewing, agreeing a sale, and then it not proceeding due to external factors totally outside of our control. The main commentary from respondents and members highlights really the inefficient and lengthy conveyancing process and how this affects sales. And the survey we carried out resulted in a report of 27% of agents have seen an increase in sales not proceeding over the previous survey 6 months earlier. So we look at the challenges, next slide, with completing sales. So first and foremost, planning irregularities. And again, giving my own experience, I've seen issues appear with structures built in the 1970s on properties that have successfully transacted many times since then. And they're now falling through due to issues of planning or lack of planning in the 70s. I had one recently where there wasn't planning permission, but we were very lucky that a family member found a document which proved that there was in fact bylaw approval for the structure. But then we've discovered that many younger solicitors and indeed younger architects or surveyors don't actually know what bylaw approval was or is. Likewise, non-compliance with building regulations is another factor raising its ugly head during a transaction. Delays with the grant of probate have been reported as a big issue. Currently, it's been reported that probate can take 22 weeks from lodgement to grant, and if there's a query, it can take even longer. There's a lot of media commentary on this issue, and the probate office has defended itself strongly against that criticism, but it is considerably shorter in other jurisdictions to Ireland. So what's happening. Other delays are boundary issues, getting deeds from banks, and this can be particularly evident as loans have been sold and banks exited the market. Other delays could be taxation issues, and one which I see continuously is low LPT returns by vendors, and then agents coming under pressure from those vendors to solve that issue for them, when in reality it's a vendor seeking the highest price for their home and achieving it, but returning a low LPT many years before. Another big issue we're seeing are slow lending decisions and drawdowns. And whilst as agents we do our due diligence on our buyers and seeking proof of funds, site of approval and principal, etc., there are many other factors which slow down the process from sale agreed to the drawdown of funds. We've all experienced it. It's very frustrating. I've seen issues with life cover, seen issues with historic student loans in other jurisdictions, meaning they can't secure a mortgage in Ireland. One of the last few weeks, which I've seen, which I was mentioning to a couple of people yesterday, was that a particular bank has a new kind of a mortgage portal to process an application, but you can't proceed to the next step unless you have a BER cert. That's all very well, but what happens if you have a protected structure? It doesn't require a BER cert, and the bank is looking for documentation that the property is indeed exempt when it's on the register of protected structures in the local authority. So next slide, we look at sales completed. And again, I won't dwell too much on this, but decline in the number of sales completed compared with the preceding 6 months. And again, you can see from that the surveys is tracking that. And then we look at the next slide, which is the factors influencing house price movements. And if you can, Grace, move that on there, possible. So I've covered this earlier on. The main reasons include the rise in construction costs, together with the falling supply of second-hand homes in the market. Most agents are reporting that homeowners won't list their properties for sale or homes for sale without clear sight of what they will buy or where they will live post-sale. And a significant fall off in rental stock, which is over 30% of sellers or landlords exiting the market, has resulted in the rental option between the sale and purchase of the next home not being an option. And the large number of cash-ready, loan-in-place buyers not in a chain has eliminated many of these potential sellers from participating in a purchase unless they sold or at least listed their property for sale. So it's a big issue. Next, we look at the BER impact on values. Again, this is something which we've introduced into the report. So it's just over a decade since the requirement to have building energy rating certs before you can actually list a property for sale or letting. And our survey of members has evolved now to include this as a question within the report. So in the survey, 69% of agents who responded believe that the rating has an important factor in the level of offer a buyer makes. It's pretty much front and center in buyers' minds. The ever increasing energy costs, together with green mortgages, which are about 0.5% better up, less than the regular mortgage, are the reasons behind this. Some research put the value of more energy efficient homes at about 25% higher than less efficient homes. And I think we can assume that this trend will continue. Interestingly, recently I've seen, just from my own side, buyers being more forensic around a home's rating, querying it, questioning a BER rating. And often the reasoning behind this is if it's a B rated or better home, they're aware of the lifespan of a BER cert, which is less than the lifespan of a mortgage. So they're wondering if when the cert expires, will they have to get a new cert, and will that be less than the more better rate that they have? So just in summary, again, thank you for your attendance and attention to this section. This is the Residential Market Monitor. I'm only presenting it, as I've said. The real work goes on within the SESI team and the members who contribute to the views. It's a sentiment survey, but as I've said, sentiment appears in our report before the official statistics catch up. So if you don't respond to the survey when it lands in your inbox, please do so next time, as your opinion is greatly counted and appreciated. And the other thing is, don't forget, it earns you CPD hours like you're earning here today. So thank you very much.
Hey, thanks, John. That was really interesting. So on to our second speaker. Our second speaker is Maeve McCarthy. She's a business graduate from UCC and also holds a master's in business administration from UCD. Further, she also has a diploma in property studies from DIT when she joined her family business in 2005, which is Charles McCarthy Estate Agents in Skibbereen. Over that period, Maeve has built up an in-depth knowledge of the property market. Her prior business experience was working in marketing and communications. She brings a wealth of experience to her role. Maeve is also an RSES registered valuer and is an associate member of the Society of Chartered Surveyors. Maeve, over to you. Thank you.
Thanks, Gerard. And thanks to the SESI for asking me to attend today's presentation. And I'm delighted to give an overview on a few key trends in the West Cork property market for 2024. Charles McCarthy Estate Agents has been established since 1968. And over that time, West Cork has continued to attract attention from both national and international buyers. Our primary market comprises Irish nationals, both residing within Ireland and living abroad, who are drawn to the region's natural beauty, cultural resonance, and the strong sense of community it offers. These individuals often seek a second home, with the vast majority being cash buyers. Following closely behind, we witness a significant uptick in interest from US buyers, especially post-COVID, who are attracted to the unique charm and tranquility that West Cork provides. This marks a notable shift in our clientele, reflecting changing global mobility and investment trends. Additionally, while UK nationals have traditionally formed a substantial part of our market, we have observed a considerable decline in this demographic since Brexit. This shift underscores the evolving landscape of international property investment and the diverse needs of our clients. Next slide, please, Grace. In the higher end of the market, one of the predominant trends we anticipate continuing into 2024 is the sustained demand for waterfront properties in West Cork. The allure of waterfront living, coupled with the growing popularity of remote work arrangements, is expected to continue to drive interest in these homes with direct ocean access. How I can best explain this is that what people will pay a premium for is to be able to walk outside the front door in complete privacy and walk down to the shoreline and jump in the water. A mere water glimpse or distant sea view might add 10% to a property's base value. Proximity to water adds 20% or more. However, adding water frontage, as mentioned, it is multiples in terms of values, especially if you add in extra land and privacy. Another interesting trend with that in the last 12 months is due to the recent extreme weather conditions experienced in other parts of the world. We have seen an increase of buyers looking at West Cork due to our temperate climate, coupled with Ireland's current stable political structure, which makes it an attractive destination for international buyers. I know you might think of all the storms we've had recently and how this measures up. These buyers are not here during the winter, so they're only looking at this as a summer destination. Next slide, please, Grace. Geopolitical events such as elections in major economies like the United States can have ripple effects on global financial markets and investor sentiment, consequently influencing the West Cork property market. The outcome of US elections in particular can impact investor confidence, economic policies, and for particularly important, currency exchange rates, which in turn may affect the purchasing power and investment decisions of international buyers. A stable political environment in the United States typically fosters positive investor sentiment and encourages capital flow into the international real estate markets. Conversely, geopolitical uncertainty or changes in government leadership may lead to fluctuations in investor confidence and market volatility, potentially impacting property demand, pricing, and investment trends. Next slide, please. As John mentioned, building energy rating certification has become increasingly important in purchasing decisions, particularly in the context of rising construction costs and the emphasis on sustainable living. With the notable exception of waterfront properties, buyers, in my experience, buyers are more inclined to prioritize energy efficient homes that promise greater affordability over time. From a sustainability standpoint, choosing a property with a favorable BER aligns with growing societal consciousness regarding environmental responsibility. Buyers are increasingly mindful of not only their energy bills, but also their carbon footprint and seek properties that minimize energy wastage. Additionally, properties with poor BER ratings may face challenges in the market as buyers may perceive them as less desirable due to higher longer-term operating costs and environmental impact. Therefore, in the context of the West Cork property market, BER certification holds significant weight in purchasing decisions, influencing buyer preferences and property values amidst the backdrop of escalating construction costs and sustainability concerns. Next slide, please, Grace. In today's digital age, social media platforms play a crucial role in shaping consumer behavior and influencing purchasing decisions. Among these platforms, Instagram stands out as a powerful tool for property marketing and brand promotion. With its visually engaging interface and widespread popularity, Instagram offers estate agents a unique opportunity to showcase listings and connect with potential buyers in a highly interactive and immersive manner. As an agency, we have leveraged Instagram's features, particularly photo posts, stories, reels, to create compelling content that highlights unique features and lifestyle appeal of properties in West Cork. By doing such, we have grown our followers organically. Through a strategic use of hashtags, location tags, and user-generated content, we have amplified our online presence, increased brand visibility, and generated leads in the competitive West Cork property market. Therefore, embracing the importance of social media, particularly Instagram, is essential for staying relevant and competitive in the ever-evolving landscape of property marketing and customer engagement in 2024. Another notable point is the evolution of AI, particularly ChatGPT, has emerged as a pivotal resource, not only for crafting detailed property descriptions, but also as a potent means of communications with sellers and buyers. Its user-friendly interface and capacity to produce content rapidly, a task that would normally take considerable time to draft a coherent paragraph, underscores its invaluable utility. In my experience, we are a small office. There's myself, my business partner, Sean Carmody, and we've one administrative staff. And my dad still works, he conducts mainly viewings. So anything that I can utilize to save time is a godsend. However, it's worth noting that while ChatGPT's output is remarkably insightful, it can tend to have fierce notions, necessitating a thorough review and editing to ensure authenticity and relevance to your prospective audience. Next slide, please. So in conclusion, West Cork seems to be continuing to weather the vagaries of the residential property market, with demand for quality properties remaining robust. However, in 2024, like other parts of Ireland, we're currently constrained due to lack of stock. So it is difficult to predict how this year ahead will emerge. Thankfully, there are genuine buyers out there. Whether we will have the houses to sell them remains to be seen. Thank you.
Thanks very much, Maeve. That was fascinating. Some lovely looking seashore properties there. So our final and third speaker is an economist. It's David Duffy. He's a director of IBEC, an affiliated Property Industry Ireland. Property Industry Ireland represents businesses with an interest in the property construction sector and property professional service providers. Prior to joining PII, David was a senior research officer at the ESRI with particular expertise in housing and was an editor of the ESRI Quarterly Economic Commentary. David.
Thanks, Jared. So today I'm just going to look at some of the kind of the overall macro trends that we see in the stats, but also talk about some of the issues behind those, and maybe some of the issues that are coming through to us in PII from our members. You know, there's also a lot happening in the policy sphere and the market at the moment, and some of these are quite positive, which I think sometimes we can lose sight of in the noise around the property and the housing market at the moment. So if we look at planning permissions, I mean, that would suggest quite a strong pipeline. We can see in the data there the impact of COVID, and probably the impact of judicial reviews and that in terms of planning permissions coming through. But on an annual basis, it's running somewhere in the order of about 35,000 homes. And when we look at the data in more detail, we can see that apartments account now for about 50% of permissions, which would be in line with the aspirations under the NPF for more compact development. One of the key things that has occupied a lot of time recently has been the Planning and Development Bill, which it's working its way through the process. We've seen the bill, which is, I think, the largest bill that there has been. There's been a huge number of proposed amendments, which are now at committee stage. The hope is that the bill will be enacted before the recess, but then the commencement of that bill will take time, so we won't see the full impact of that on planning for some time as various stages of it are commenced. It does try and address a lot of the issues, but I don't think it's a full panacea for everything, and undoubtedly issues will still remain. And what we're hearing is that there has been some improvements, quite independently of the bill. There has been have been some improvements, and the schemes going in under the large-scale residential development process are getting permissions, are moving through on Bord Pleanála. So there have been some positive developments quite apart from the bill. If we look at the next slide, what we see are commencement notices. Now, again, you can see the impact of COVID on those, with the dip there in 21, a recovery, and then what we're seeing now is a strong upturn in commencements. That probably reflects the development levy and utility connection refund scheme, which has been hugely important in its positive impact on viability and people's decisions to commence schemes. We're probably going to see very strong, the data is available up until the end of December. We're probably going to see very strong commencements for the first quarter of the year. The scheme is supposed to end in April, and we've made submissions to government looking for an extension of the scheme. But an early decision on that will be really important. Even though the scheme runs to April, I think we need certainty around it now, because people are making decisions now about whether to commence with schemes or not. So I think it has been hugely important. It has had a positive impact on the commencement numbers, which we can see in the graph. But I think, as I say, an early decision on extension is really, really important, and something that we've been pushing for. If we move to the next slide now, so having looked at planning and commencement, we can now see completions, and the rolling sum, as you can see, remains above 30,000, which is now in line with the existing NPF targets. But as John mentioned in his presentation, the feeling really, and the view of the market for some time now has been that the 33,000 annual average that the NPF is based on is actually much lower than the requirement, and that the requirement. We've seen numbers out there in the order of 40 to 60,000. So the current NPF review and the revision of the demographic projections that underpin the NPF review is really critical. The SRI are working on new housing population forecasts and housing demand forecasts, but those are really important. I would say, however, that I think while the number is important and getting a sense of the size of the target is really important, I think it's how these numbers interact with policy is probably more important. Forecasts are there's always going to be a margin of error on forecasts and projections. But if the numbers, as we've seen in the past, if the numbers are treated as a ceiling rather than a floor, they can have a huge impact on where development can take place in that. So the NPF review, really important. The demographics, absolutely really important. But I think what's probably more important is how they interact with policy, and I think that's a key message. I also just show there the split of completions by type, and we can see apartments and scheme houses really representing most of completions, which is really important and what we need. If we move on then to the next slide, I just pick up the issue of the NPF review and the demographic forecast, because this compares the population in 2022, in Census 2022, relative to both the population in the census in 2016 and the projected population for 2040. And you can see that there's been, like, the Irish population has grown substantially, has grown faster than other European countries. But you can see there that in many cases, we've achieved, in a couple of cases, over half the growth that was projected out to 2040. But in a lot of cases, I mean, we're in the order of half the growth that had been projected out to 2040. So much stronger population growth that had been anticipated. And I suppose, look, that's reflected in what we're seeing in the market with really, really strong demand. So yeah, the population projections, as I say, really representing something quite important, and important that the next set of numbers, I suppose, reflect that population growth and the impact on the housing market. If we just move on to the next slide, I suppose one of the issues that did dominate for a long time was the increase in materials. Now, this is a basket of materials that the CSO construct a wholesale price index for building and construction materials on. What we can see there is the impact of the Ukrainian war and how that led to a real spike in input costs. Now that's tapered off, as you can see, but I think looking at the annual growth rates kind of masks the story there. And if you look at the levels, we can see that, yes, the growth rate for the overall basket has come down, but the level still remains elevated. So that impact of input costs on viability hasn't gone away. I do accept, though, that within that there are quite a range of goods and services or input materials. And in some cases, the most recent index, for example, would show that steel prices have come back, but the overall basket remains elevated. So depending, you know, the impact is going to be different for different people. But for me, the story is, yes, annual growth has come back, but the level itself remains elevated. So there are some viability challenges there. And then on to my final slide. I think we're seeing a lot of positives in the housing market. A lot of those, maybe, as I say, are being lost in the discussion around the housing market. There are a lot of key things coming up, which will shape the market both in the short term and the medium term. As I mentioned, the National Planning Framework Review, the Planning and Development Bill, also the impact of measures like the residential zone land tax and the land value sharing both of these, I think the concept behind them in terms of getting land into the market are both good, but there are huge issues around their implementation, and particularly the RZLT for the moment is occupying a huge amount of our time in terms of engaging with finance as to how the tax as it's structured at the moment is actually impacting on the market rather than how it's intended to. So a lot of work there, and you know, we'll have to see how those pan out as to how they finally impact on the market. As I mentioned, I think the development levy scheme extension is hugely important. It's important from a viability point of view, but at the moment, what I think is important is getting certainty around it. We're also waiting for the Housing Commission report. Now, that's supposed to look at the market post 2030, but I think what would be really interesting there is what needs to be done between now and 2030 to facilitate the recommendations that the Housing Commission make. So I think there's a lot happening. A lot of it potentially is positive, but we'll have to see how it's implemented. But I'll leave it there now, and happy to engage in the Q&A.
Thanks, David. That was really interesting. Not sure if there are any questions. Attendees might think about popping in a question into the Q&A. Just might kick things off with one or two questions. David, to you, as you said, and I think we all recognise as people that are working in the industry, the undersupply of new homes, the grandiose plan that was produced a couple of years ago called Housing for All proposed about 30,000 houses, and we all recognise that that's grossly inadequate. We're clearly supply constrained, and there's resource constraints to get those houses built. I mean, do you think there's any reason to be optimistic that we can expect to see supply pushing up on new homes?
I think so. I think we've seen. I mean, the data that I showed would suggest that the pipeline is increasing, and that we are seeing an increase both in planning permissions and commencements, which would suggest that. I think, you know, if we take it that we need to get to somewhere around 50,000, I think there is capacity within the sector to deliver that. I think that probably a lot of the constraints that we're seeing for the sector are probably external to the immediate sector itself. So it's issues around maybe planning, issues around capacity of utilities. I think the sector itself has shown itself, and it's engaged. It's also using. There's increasing use of modern methods of construction. So I think the industry has shown itself to be flexible and innovative in a way that maybe it hasn't been seen as in the past. And I think. Look, undoubtedly there are issues to address, but I think a lot of the constraints are probably external to the immediate sector itself.
And talking about that supply, I mean, bearing in mind maybe the issues in the commercial property market and certainly the office sector, do you think there's an opportunity for some of that, certainly older stock, to be repurposed into residential?
Absolutely. I think that does represent an opportunity. There is a Department of Housing working group on that, and I know some architects have done work on repurposing office stock. So there are a number of kind of innovative solutions around that, around the whole meeting the residential demand, be it either through new or existing stock.
Yeah, I think this is an issue globally, isn't it, really, because COVID has such a profound impact on the office demand and how we
absolutely. And I think also the fact that there has been some slowdown in the commercial side does free up resources for the residential. So while some of the skills don't flow naturally between the two, it does free up capacity to meet our residential needs at a time when commercial is that bit quieter.
Yeah. The final question towards you, David. We all recognise the impact interest rates have on the cost of borrowing and the impact generally in perception of the market. We're at interest rates now at almost a 22-year high. I know this is a question possibly for your ESRI colleagues. Where do you see interest rate movements going forward?
I think we're starting to see inflation come back internationally, so that will take some pressure off interest rates. And I think central banks are kind of aware of the fragility of economies, for want of a better way of putting it, and that interest rates have been elevated for quite some time now and have had an impact. So I think with inflation softening, I think there will be, I think we can expect to see interest rates come back from where they were.
Yeah.
Where they are now. Yeah.
Okay. Briefly to John and Maeve, I suppose your own personal experience and outlook for the market in South Dublin and West Cork, respectively. John, where do you see the market in the short term?
Look, I think the answer is starved of supply. Stock just isn't out there. Like in a normal functioning market, we should be selling double what we currently do. Majority of everything you list sells. Majority of everything you list, if it's priced correctly, has a queue of buyers. There can only be one buyer, of one home, yet there's multiple people bidding on properties. It's very, very frustrating for buyers. It's interesting that since we've seen the cycle of interest rates, that there is a ceiling. So it's very interesting. Like buyers will only go to a certain level; they can't go beyond because obviously the cost of borrowing and the availability of it. So yeah, I mean it's not an easy market to work in, and I think a lot of frustration out there amongst agents trying to get the sale of property, solicitors trying to transact it, clients trying to buy it, purchasers trying to buy it.
Maeve, do you have a view?
Yeah, I would echo what John said. It's just the lack of supply is significant. There just doesn't seem to be this time of year. I would expect numerous calls out to people in view of getting their property ready for the summer market, going out to pitch for business. And its calls are a lot lower than I would have expected this time of year. Our season is becoming a little bit more condensed in that people are listing later. And so it's listing and viewings at the same time. So the season is becoming much more condensed. So it's frantic then from May to the end of August. And then it peters off again. For September, October can be busy, but then November, December, January, very, very quiet. And February, just starting to pick up a little bit now. One thing I want to touch on what David said about repurposing commercial stock, and one thing I notice in living and working in a rural town is that we have a lot of commercial premises on street level with residential accommodation overhead, and similar to most cities as well. And if something can be done to encourage people to live back in the town, and either with some sort of incentive to repurpose these buildings and they live there, and even not have a commercial unit on the ground floor, repurpose the whole thing into residence, that would be great. I mean, in relation to the vacant home grant, I had one property that sold just directly opposite my office here, who availed that grant and was a shop with residents overhead. And it was a 3-bedroom house, and they paid 185,000 for it. And we're going to get a grant of up to 50,000 to do it up. I just seem there's something being missed there by the general public about the value in some of these towns.
I've seen that as well, interestingly.
Yeah.
And my nearest local urban area where I live is Dun Laoghaire, and Dunleary Main Street, Upper Georgia Street and Lower Georgia Street. So if you look at, say, for instance, retail indexes many years ago were Henry Street, Grafton Street, Georgia Street, Dun Laoghaire. There were the retail indexes people used to use. Now you look at Georgia Street, Dun Laoghaire, it's vacant, or it's got charity shops or pop-up coffee shops that come and go. And in reality, there's been units there that people, like I know one particular unit just off Georgia Street where it was a shop unit and someone tried to convert it to a house, and the local authority was just totally against it because they didn't want to lose the rateable income on it. And to me, it's just a nonsense, because main streets around the country are dying a death. Retail is dying a death. Yet, if you get the old-fashioned way of getting people back living on the street, they will shop on the street. And You look, for instance, like Dunleary on a Sunday has a market in the park that is people come from far and wide to buy speciality breads and cheeses and whatever else. Yet if those shop units were in the centre of the town, could thrive in the town if those people living in the town who would use them.
Yeah, I agree.
David, do you view on that in terms of urban regeneration in rural areas?
I think it's important, and it probably is. I mean, there are vacant properties there that people could make use of, and as John and Maeve said, it kind of becomes a self-fulfilling virtuous circle then, because there are people living in the towns which can encourage some retail. I'm one of these people who drive over to the People's Market in Dunleary, so I know exactly what John is talking about. But yeah, I mean, the vacant grants, if they serve their purpose, and with that kind of remote living as well, or that move towards hybrid working, you would hope to see regeneration of the rural town centres, which I think is hugely important and is a way of meeting demand with what's there already, which is also important from a climate point of view, where you're using something that's already there rather than having to replace it.
Yeah. We might take a couple of brief questions from the Q&A that have been posted. One here, possibly directed to you, David, suggested of the 30,000 houses constructed, do we have a breakdown of what social and affordable is as opposed to private?
Social and affordable, yeah, I mean, social, I think runs at around between kind of 6,000 to 10,000, roughly. Now, depending on the year, but it's roughly of that order. Then you've got one-offs running at about 5,000. So it's about a third of it when you take account of everything.
Yeah. John, a question for you. Where do you see secondhand stock coming from this year in Dublin?
I think it's probably pretty much the same as, I mean, look, if there was new homes built in Dublin and those new homes were being built to sell, for instance, like apartments, yes, they would be bought by people who are trading down. They're not being built, just built to sell. And so that type of person can't actually purchase a property. And very often I'm selling homes, probate sales, and I mean, the families would say to you, oh yeah, mum or dad, the late mum or dad, they should have moved, but they didn't move. But they didn't move because they'd nowhere to move to. So predominantly a large portion of our sales are probate sales, executor sales. I just see it being the same as last year, and that's what it is now. Again, 30% of the market is landlords selling up. Are there many left? Private landlords left? I don't know. And that's also a side as well.
So I think we're all of the view the supply side is going to remain constrained. Where do you see that impacting on prices over the next year or so? Both John and Maeve, I'll put that to you.
I would say prices will hold and increase, probably modestly, because obviously the cost of borrowing and the availability of, you can only, there's a ceiling, you can only pay so much. The demand predominantly that we see are young buyers. It's interesting. A friend of mine rang me a couple of weeks ago at a house I was selling, and he said to me, oh, his nephew had an interest in it. Now, when I remember his nephew, he was 10, he's now 30, and in a position to buy. And like that's and that's a house that had 50 people viewing it on a Saturday and 10 people trying to buy it. Only one person could buy it, and that's the market. Yes, modest growth, I'd say.
Maeve?
Yeah, I would agree. Just in relation to because of lack of supply, anything that's of any notable quality is priced well, sells quickly. Then if the vendor's expectation is there's difference there between where the market's at and their expectation. Obviously, that takes longer to sell. But yeah, I would see prices holding or margin increasing, due primarily to a lack of stock. I mean, we have like multiple buyers on our database now, kind of they have their money in place, cash buyers really wanting to look for this kind of unicorn of a house that we don't have at the moment because it's just not on the market.
Yeah, hugely frustrating as
Yeah.
estate agents. My
Yeah.
experience as well. You get bidders, you've underbidders there that are ready, willing, and able to buy, and you simply don't have the stock. So massively frustrating. Listen, I think we'll conclude. We're just a couple of minutes to go. Finally, to Maeve, to David, and to John, many thanks for your contributions today. Hopefully, the participants all found that immensely useful. We have, as I said, a series of the 360 series, and the next one is coming up on the 20th of March. So hopefully, lots of people will attend to that. Of the people that logged in today and attended, you'll get your CPD. Many thanks for doing so, and we look forward to seeing you again soon. Thanks, everyone.
Thank you. Thanks.
Thank you.
Bye.
Thanks.